Live. Can you listen to me live? So I am live on 3 channels: YouTube, Facebook, and LinkedIn. If you can see me, watch me, put in the comments below. Live. So happy to see you. And just one question here. Okay, you asked me one question here. I'm live with all my home studio setup. Yeah, this is live. You're watching it live. Just next 20-25 minutes, I'll bring you live news. Live news. Yes, can you listen to me? Live. In the next 20-22 minutes, I will be bringing you my opinion on the most important money developments in this week. 22 money developments and my weekly thoughts about it. My weekly financial intelligence report from the last 2 weeks. 22 top developments and one financial planning question at the end. So let's go live. And here I begin with just one thought. If there are number of investments, if there are number of developments happening, how do you assess where do you want to be? And which of these developments do you want to work upon this week? Why are they important to you? Tell me in the comments. Even if you're watching it later, why is the developments of the day, of the week so important in our lives that we have to take cognizance of what's happening around us? And what repercussions does it have on you? So if oil crossed $100 and then retreated, the rupee came to nearly 97 against the dollar and then recorded its strongest weekly recovery in months. If the Indian markets fell sharply, recovered and ended the week substantially above the last Friday levels, the Federal Reserve kept its rates unchanged, but long-term borrowing cost may rise. Gold moved higher. Higher fixed deposit rates from certain banks attracted a lot of attention, and digital banking, pension tools, global investing, financial influencers, credit cards, and even flooded vehicles in the monsoon created important household finance questions. They're not 1, 2, 3, 5, they're 22 important instructions. To buy, to sell, to borrow, to switch, or to panic. How do you decide? These 22 developments that Indian families must interpret correctly now. Today, I'll explain what changed in the last 1 week, why it deserves your attention, and how it may affect Indian investors, professionals, entrepreneurs, retirees, and the NRIs. So without any delay, let me focus now on to how it affects your life today. And why did I pause? Because it deserves your attention. You need to put in the comments how it affects the Indian investors, the professionals, the entrepreneurs like you, and the retirees and the NRIs. And what I believe Indian families should or should not do next. Hi, I'm Taresh Bhatia, a certified financial planner professional, financial freedom specialist, and AMFI registered mutual fund distributor. This is the Taresh Weekly Intelligence Brief Report. Let us begin with the variable connecting several stories this week: crude oil. So let me put this into perspective. The first part is the macroeconomic picture, then I'll bring it to nano. My first report is count to 22. Oil relief is useful, but it's not a resolution. Crude oil moved from above 100 rupees a dollar, $100 a barrel towards the high 80s as immediate geopolitical pressure reduced. For India, this matters because oil affects both in petrol and diesel. It can influence transport costs, food distribution, manufacturing margins, the current account inflation, and the rupee and the interest rate expectations therefore. The decline is therefore constructive. Last week I said 100, now touched 87, 90, but it does not prove that the geopolitical and supply risk have disappeared. The opinion is simple. Do not redesign your financial plan around 1 week's commodity price. Families should stress test fuel-sensitive expenses. That's what I said last week. An entrepreneur should monitor freight, power, margins, working capital, and receivables. Retirees should maintain an adequate inflation and liquidity buffer for this purpose. So lower oil can provide a breathing room. It should not create a complacency for that matter. Report 2. The rupee recovered, but overseas liabilities remain. So what does rupee recovery and currency uncertainty mean to you? The rupee, as I saw it, the rupee recovered sharply after approaching 97 against the US dollar. And on Friday, it was heading towards its strongest week in several months, supported by a weak or rather weaker dollar, softer oil, and reported Reserve Bank of India intervention. This is helpful for families who are paying overseas university fees, international travel costs, or imported business expenses. But RBI intervention cannot guarantee the exchange rate available on the day of a family's payments. So my recommendation is to stop treating currency as a prediction competition. The foreign currency amount required, the payment date, and the money already converted, and how much amount is still exposed. And therefore, the emergency liquidity remaining after the payment. So these steps will help you use a stronger rupee to improve funding discipline. So do not treat this one strong week as a proof that depreciation risk for that matter has ended. That's the dollar rupee. Report number 3. Sensex and Nifty recovered strongly during the week. Sensex and Nifty recovered. Last week the Sensex closed at 76,059 and the Nifty at 23,767 after a difficult week. At the last independently verified today, Friday report reading, the Sensex was at 78,003, up 0.09% for the session, and the Nifty was at 24,358, up 0.17%. Against last Friday's close, that represented an approximate weekly recovery of 1944 points or 2.56 for the Sensex and 591 points or 2.49% for the Nifty. Happy? So the important description for the Friday itself was broadly flat to modestly positive, not a dramatic rally. Financial and automobile stocks supported the benchmarks, while the information technology shares corrected after the recent advance. These readings are verified during the Friday trading and should not be described as an official closing for that matter, taken from various sources. My opinion, the weekly recovery improves sentiment. It does not prove that every evaluation, earnings, or geopolitical risk has disappeared. Therefore, a market index measures the market. It does not measure the suitability of a decision for your family for that matter. Report 4. Slower growth does not mean recession. People talk about slowing growth in India. 6.6% forecast, still economic expansion. Well, a Reuters economic poll forecast that India's economic growth could slow to approximately 6.6% in the current financial year compared to the stronger growth in the preceding period. Now, that is a forecast, not an official completed outcome. And one important point is 6.6% growth would still represent economic expansion, not recession. Therefore, your financial planning significance lies in the possible loss of momentum. A senior professional may experience slower increments or more cautious hiring. An entrepreneur may face delayed inquiries, tighter margins, or slower customer payments. And an investor may see different earnings outcomes across sectors and companies. So my recommendation is not to exit long-term investments because of one GDP forecast. Instead, stress test your household income. Strengthen your emergency liquidity. And third, important, avoid unnecessary discretionary borrowing at this point of time and ensure that your portfolio does not depend on every company delivering perfect growth going forward. Yeah, this is live. And the recordings, you may be seeing it. Outcomes across sectors and companies. So my recommendation is not to exit long-term investments because of one GDP forecast. Instead, stress test your household income. Strengthen your emergency liquidity. And third, important, avoid unnecessary discretionary borrowing at this point of time and ensure that your portfolio does not depend on every company delivering perfect growth going forward. Yeah. Across sectors and companies. So my recommendation is not to There was a correction there, so I just made the update weekly now. Just checking the live telecast. Yeah, going fine. So report number 5, that's where I ended the last time. And slower growth may not produce an immediate RBI rate cut. So most economists surveyed before the RBI meeting expected a repo rate to remain unchanged. This matters because borrowers often hear slower growth and immediately expect cheaper home loans. But monetary policy must balance growth against inflation, oil, currency stability, liquidity, and global interest rates. So my advice to borrowers is do not wait for the RBI headline to examine your loan and download your latest statement, identify the benchmark, check the lender's spread, what rate he's offering, and confirm the reset date, and then compare the rate offered to a similar new borrower if you're trying to update. So this way you'll be able to calculate the full cost of repricing and transferring the loan if required. A rate forecast should not determine whether a family can afford its EMI now. Therefore, the financial plan which you have should remain workable if interest rates stay unchanged longer than expected. That was report 5. Report 6. The Federal Reserve rate is held, but financial conditions moved. भी नहीं हो सकता, मेरा क्यों चाहिए, लाइव हूँ यार. Just a second, I have to interrupt the live. ले जाओ. So the report 6